Hello everyone, I'm Jerry D'Ambrosio and welcome to this week's special presentation, a personal guide to smart investing, the prudent approach. So a prudent investor is one who approaches investment decisions with foresight, carefully assessing risk and potential rewards before committing capital. They prioritize preserving capital and achieving steady, sustainable growth over seeking quick profits. So we are just after halftime here of our four-part series on investment styles. Glenn kicked us off a few weeks ago and discussed the aggressive approach or the aggressive trader. Jim followed up last week with the conservative investor, what it means to be a conservative investor, and we're going to discuss today the prudent approach, what it means to be a prudent investor. I do think that most folks do fall under this category. We've introduced what we call the strategic investment matrix. This is a chart here where we categorize the four different investment styles. We'll talk about speculative next week. And each investment style is determined by their risk-reward profile. So as Glenn discussed a few weeks ago, the aggressive trader is looking for high reward, but is willing to take on a little bit more risk. The trades and investment that an aggressive trader will take do tend to be a little bit riskier. They do have the ability, though, to move up and down in price quickly, which does lead to potentially higher rewards. Jim talked about the conservative investor last week, where capital preservation and low-risk investments are key. Conservative investor, not looking necessarily to outperform the market. That's always a bonus, of course, but they'd be happy just to keep pace with the market. Conservative type stocks do generally pay a good dividend, so the conservative investor is collecting income even though the stock's price isn't appreciating all that much. And today we'll talk about the prudent investor. Prudent investor is really looking for the best of both worlds. High reward, but low risk. So a prudent investor is looking to outperform the market over time, but isn't willing to take on a lot of risk. Here are the four quadrants. The type of stock that an aggressive trader might favor are more volatile stocks. Again, stocks that do have the ability to move quickly, because an aggressive trader or investor is looking for short-term gains. They do want that upside, though. Conservative investors looking for steady performers that pay a good dividend. So low risk, low reward type of investments. Again, capital preservation for a conservative retirement-minded investor is paramount. And then prudent investors are looking for safe stocks, but they want that upside potential as well. Aggressive trader will favor stocks with an RV greater than 1 and an RS less than 1. So they want that upside potential, but they're willing to take on a little bit more risk. Remember, RS, relative safety, is an indicator of risk. If the indicator is above 1, you're looking at a relatively safe investment. RS below 1, a little bit more of a riskier investment. So these two indicators here are how we determine the type of stock that each investor should consider. Conservative investors, let's start with RS, because as a conservative investor, we need that RS indicator to be above 1. Safe, fundamentally sound companies that do a wonderful job quarter over quarter, year over year with reporting earnings, good earnings. These high RS stocks do generally pay a good dividend as well, and not so concerned with the long-term price appreciation potential, so it is okay if the RV of the stock is less than 1. And then prudent investors, again, the best of both worlds. They want the upside potential long term, but they're not willing to take on too much risk. So they want the RV to be greater than 1 and the RS to also be greater than 1. I think most of us, again, do fall into this category. And let me say this about each of these categories, and again, we'll talk about speculative next week. We hope that you're well-rounded investors and are allocating portions of your overall investment capital to these different types of approaches. So you might be managing a retirement portfolio, self-managing a retirement-minded portfolio. The stocks in that portfolio should be conservative stocks. With a retirement portfolio, capital preservation is key. You want to collect income during retirement, that falls into the conservative category. If you're a swing trader, a little bit more of an aggressive trader, you may allocate a portion of your portfolio to that type of strategy. You can also allocate a portion of your portfolio to prudent and even speculative. I think speculative, though, might be a smaller percentage of your overall investment capital because the risk is so high with speculative investments. Again, Steve will discuss that next week. So let's get into the software. I'm going to start us in the Unisearch tool, and I'm going to open up a folder we have here called Searches Prudent. We have folders for each of the categories: speculative, prudent, conservative, aggressive. I'm just going to start here with the Searches Prudent folder and highlight just a few. These are all good searches, but I want to highlight just a few. Best of the biggies, if I were to run that as of right now, the close of yesterday, June 6th, here are the stocks that are returned. These are all familiar names, right? So we're looking for the RV to be greater than 1, the RS also to be greater than 1. Remember, the stocks here, since they're prudent, have to have that long-term upside potential, and also we want them to be safe investments. So if we just do our research here and continue, by the way, the sort, fantastic sort, RV times RS times GRT, which is earnings growth rate, times market cap. So the best combination of all four of those indicators that brings the stocks to the top of the list. You got NVIDIA, you got Amazon, Microsoft, Meta, Google, Eli Lilly, Novo, Broadcom, Berkshire Hathaway. Okay, so quality stocks in here. A lot of these stocks are overvalued, but that's okay. Speaking just for a moment on overvalued stocks, I know we favor to buy undervalued stocks, but these stocks in particular, tech stocks in the AI space, a lot of these stocks are trading at a premium, a little bit over their value. As long as the fundamentals are favorable, as long as RV is above 1, RS is above 1, you're looking at a fundamentally sound company, and that's the case across the board. Some of these stocks are going for a premium right now, like Microsoft, $424 price, $288 value. Of course, NVIDIA, the darling of the space here, $1,209. We value it at $908. Stock's about to split today, 10 for 1, I believe. But these are the types of stocks that you want to favor. High RV, high RS. Some of these stocks are just beginning their uptrends. They either have a buy or a hold. Look at those CI scores. Earnings growth rates well outpacing the current sum of interest and inflation. Do these stocks pay a dividend? We'll go over to our dividend analysis. Some of them do. Most of them do, actually. So great list of stocks here. And in just one click, you found them. Best of the biggies. And if I were to go back, just do a quick test here from the first GLB RT kicker up signal. That's a signal that we've really been paying attention to. You know, the first GLB RT kicker up signal after a confirmed down is historically the best. So I think it was May 2nd, 2024 was the first one. Click OK. Run that scan. Let's see what stocks were at the top. It looks to be the same list of stocks. So the top 10 stocks from our first GLB RT kicker up signal to now, 9 winners, 1 loser. Biggest winner, of course, NVIDIA. Novo went up 15%, Meta 11%, Eli Lilly 11% as well. The average went up 9%. Now, what did the S&P do? Well, the VVC only went up 3%. So that's what we were talking about earlier about prudent investors and prudent type stocks should outperform the market over time. If you do any kind of testing or research with conservative stocks, you'll probably realize that they're not going to blow you away with performance, but you're going to keep pace with the market, maybe underperform a little, maybe overperform a little, but the income that you're generating from dividends helps quite a bit. So let me just put in the SPX here. S&P went up 6%, so that's basically what you should expect. Outperforming the market with stocks that have tremendous long-term upside potential. That's based on earnings growth, profitability, and good RS scores. So that's best of the biggies. Another one is Chappell's Champs. So here, we're just looking at the top 100 VST stock. We want the average volume greater than 100,000. We want the price greater than 10 bucks, and that's basically it other than the sort, just ruling out inverse ETFs. VST times CI times GRT, great sort there. We're looking for the best combination of the VST indicator, the CI, and earnings growth rate. Again, the only list that we will be searching through will be the top 100 VST stocks. Here's the list as of May 2nd. That was that GLBRT kicker up signal. Got NVIDIA, and a lot of other stocks in here that weren't in the list before. But look at the scores. But here you have an RS a little bit below 1, just barely below 1, barely below 1. But if you're happy with the list and you just wanted to quick test the top 10, you can see this basket has 5 winners, 5 losers. Elway down 47%. Now the basket only went up about 2.5, so just point to point, we didn't keep pace with the S&P. However, if I right-clicked on Elway, view the stock graph, and took a look at price action here, you could see that we gave this stock a sell rating back at about $17. So you wouldn't have lost all 42% here. So the damage wasn't too bad. Remember, using our sell rating, if you're a prudent investor looking for long-term gains, don't want to take on a lot of risk, you want to hold stocks for a longer period of time, the sell rating is an excellent guide to help you manage those positions. And then finally, I like this one, biggest bargains. This is more of a bottom fishing search for the stocks that we've been favoring up until this point. So if I click on run search, you got RV times RS times market cap. So on the left side of the divider, we're looking for the best combination of those three, but we want the RT to be relatively low. It doesn't have to be at 0.2, but relatively low, again, based on the combination of RV, RS, and market cap. So here on May 2nd, you had Microsoft, you had NVIDIA, Amazon, Meta, Apple, Google, a lot of the same stocks that we looked at before. Solid fundamentals, but the RTs weren't all that high. So this is more of a bottom fishing search for blue chip stocks. If I quick test the top 10, looking at about a 13% gain. So as the market began to rise, remember that GLBRT kicker up signal, that was the first one on May 2nd. So the market had bottomed out, began to show some upward momentum. So good time to go bottom fishing for blue chip stocks if you are a prudent investor. Greatly outperformed the market, 10 winners, no losers here. And then the last thing I want to show you guys is a couple back tests that I put together with those 3 searches going back about a year and a couple of months, using the GLBRT kicker up signal and just using a recommendation equals sell. Buy stocks that meet the search criteria on a green light buy or RT kicker up signal, and sell them when they get a sell rating from VectorVest. So if I click on biggest bargains here, go to edit, GLBRT kicker was the market timing signal, biggest bargains was the search, stop criteria recommendation equals sell, just trying to maintain 10 positions, automatically replacing closed positions as long as there is an up signal, and going to cash on a down. Just the last year and a month, some pretty good returns here. 28% compounded rate of return with biggest bargains, 44% with Chappell's Champs, 33% with best of the biggies. Pretty low drawdowns across the board as well, with really strong winning percentages across the board. So just a guide here. You buy good quality prudent stocks, RVs above 1, RS is above 1. You buy them when the market's rising. You favor some of those searches that we've just highlighted, best of the biggies, Chappell's Champs, biggest bargains. Again, more of a bottom fishing search. I think that would be a good search to scan or to consider when you get the first GLBRT kicker up signal after a confirmed down signal. Looking for those beaten down blue chip stocks like I said earlier. Well, folks, thank you for joining me tonight. And remember, we're going to finish off this series next week with the speculative investor. So hope everybody has a great weekend, and we'll see everybody again next week.